The world's richest are bleeding money. Zuckerberg, Bezos, Musk, Arnault, Gates. As global markets reel from Trump's new tariffs, billions are evaporating from the portfolios of the ultra-elite. But one man stands alone in the green. Warren Buffett. While his peers lose tens of billions, the Oracle of Omaha is up, quietly, steadily, and on his own terms. In this episode, we dive deep into how Buffett bucked the billionaire bloodbath, what makes his strategy different, and what this means for the future of global markets. Let's get into it. Chapter 1. The Billionaire Bleedout. 2024 has been brutal. The S&P is down nearly 10% year-to-date. The Nasdaq is in correction territory. International markets are worse, and tariffs have lit a fire under everything. Just look at the scoreboard. Jeff Bezos, down $42.6 billion since January. Mark Zuckerberg, down $24.5 billion. Elon Musk, nearly $30 billion wiped off Tesla's valuation. Bernard Arnault, LVMH, luxury collapse, down $18 billion. Even Google's Sundar Pichai and Microsoft's Satya Nadella are feeling the squeeze. It's not just paper losses, it's a global wealth contraction. But then there's Buffett. Chapter 2. Why Buffett's winning. Buffett's secret? He did nothing. While Silicon Valley doubled down on AI bets and expansion, Buffett hoarded cash. Berkshire Hathaway ended 2024 with $334 billion in reserves. His letter to shareholders said it all. We found nothing compelling to buy. Translation: when everyone else was chasing hype, Buffett stayed on the sidelines. And now? Berkshire Hathaway is up 11% YTD, outperforming almost every major index. This is peak Buffett, cautious, contrarian, and cool-headed. Chapter 3. The Tariff Fallout. April 2 changed everything. That's when President Trump shocked the world with a new wave of tariffs. 104% on Chinese imports, 25% on EU goods, tariff threats on Mexico and South Korea. Markets didn't just wobble, they cratered. Tech stocks, luxury brands, and global logistics all got hammered. But Buffett barely flinched, because his portfolio leans heavily into American utilities, railroads, value stocks, insurance float. These are slower moving, less global, and more resilient in tariff storms. Chapter 4. How Others Lost Big. Bezos. Amazon depends heavily on Chinese imports, logistics, and global cloud markets. Tariffs squeeze all three. Zuckerberg. Meta's ad model is sensitive to macro slowdowns. Rising costs, plus falling user growth, makes brutal valuation hits. Musk. Tesla relies on global supply chains, especially for lithium, batteries, and parts sourced from Asia. Not to mention recent competition from BYD and a slumping EV market. Arnault. LVMH's dominance in luxury relies on global demand, especially China. And with consumer spending down, it's carnage. All of them bet on globalism. Buffett bet on American inertia. And it's working. Chapter 5. The Cash War Chest. $334 billion in cash is not normal. Most CEOs would be forced to spend, acquire, or reinvest. Buffett just waits. We never want to risk permanent loss of capital. With interest rates high and valuations inflated, Buffett saw the storm coming. Now he can buy distressed assets at a discount. Support U.S. infrastructure plays. Wait for panic sellers to hand him bargains. It's not flashy, but it's deadly effective. Chapter 6. Be greedy when others are fearful. It's the quote everyone knows. Be fearful when others are greedy, and greedy when others are fearful. Right now, the market is fearful. And Buffett's sitting on more dry powder than ever before. While Silicon Valley scrambles to save their stock prices, Buffett can. Absorb energy assets. Expand insurance empires. Make a surprise mega deal. He's seen this movie before. In 2008, he made billions backing Goldman Sachs and Bank of America during the crash. 2024 might be his next act. Chapter 7. Buffett versus The tech bros. Buffett has long been skeptical of tech hype. Yes, he owns Apple, a massive stake. But he's avoided social media, streaming wars, startups with negative cash flow. Compare that to the tech elite. Musk bets on AI plus Mars. Zuckerberg on VR plus Threads. Bezos on drone delivery plus Alexa. They're playing exponential games. Buffett's playing survival. And right now, survival is outperforming everything. Chapter 8. What this means for the market. Buffett's move signals something deeper. Smart money sees danger. When the most trusted investor in the world hoards $334 billion, it's not bullish. It means valuations are too high. Risks are mispriced. Real opportunity hasn't arrived yet. Buffett is positioning for post-crisis buying, not late-cycle chasing. And if more billionaires follow his lead, this downturn could deepen before it rebounds. Chapter 9. Can you copy Buffett? The beauty of Buffett's strategy? You don't need billions to follow it. Here's how to channel the oracle. Stay liquid. Keep cash available for downturns. Avoid hype. Don't chase meme stocks or speculative fads. Own quality. Strong brands, cash flow, essential services. Think long-term. Buffett never panics during dips. Read, don't react. Stay informed. Stay rational. You may not beat the market, but you'll avoid its worst traps. Chapter 10. Final thoughts. In a year of volatility, Warren Buffett is the lone billionaire who saw it coming. While tech kings watched their fortunes evaporate, Buffett stayed calm, hoarded cash, and now sits atop the financial food chain again. It's not luck. It's discipline. We don't have to be smarter than the rest. We have to be more disciplined than the rest. And right now, discipline is winning. If markets continue to slide, Buffett will be the buyer of last resort. And if history is any guide, he'll walk away richer than ever.